Hi everybody, I'm Tom Dorsey and this is the DWA Minute for India. It's the 17th of December and I just wanted to say I hope you all had a good holiday today. Notice behind me you see some white. Can anybody see some white out there? We got some snow the other day and we're looking at a possible another snow this Saturday and another one the following week. So maybe we'll have a white Christmas. I think everyone's hoping for that. But I don't think anyone actually likes snow per se unless you're under the age of 10. So in a couple of weeks, not in a couple of weeks, actually the day after Christmas, we head out to India. And hopefully I'll see some of you along our route. We're starting in Jaisalmer, Rajasthan, and we're going to be going down to Cochin, all the way down the coast. It almost looks like we're going to be going down the California coast to the bottom. A lot of interesting places we're going to be stopping. So we'll give you our route the day before we leave, so you keep an eye out for us, and you may be able to see us along the trip. Stop and say hello. Maybe we can stop in and visit with you if you have an office that's near us on the trip. We'll be happy to do that. Let's talk for a minute about the India markets. One of the things I looked at when I was going through the market was the bullish percent index on the India market. It's on the 500, the BSE 500. So it's a pretty deep bullish percent index. And what this is a calculation of the percentage of stocks that underlie the India market, the BSE 500, that are on point and figure buy signals. Now, you can't get on a point and figure buy signal without actually moving higher. So when this index gets down below, it's a contrary thought process. When it gets down below 30%, we consider it low. When it gets above 70%, we consider it high. In other words, once you go below the 30% level, just about everyone who owns an India stock has probably sold it. And conversely, when this index gets above 70%, you can pretty much say that everyone who wants to be in the market is probably in the market. And what that does when it takes you back to the irrefutable law of supply and demand, economics 101, is once everyone is in that wants to be in, the availability of demand to force the market higher is relatively limited. Conversely, when you get down to a point below 30%, pretty much everyone has sold out and there's very little supply to force the market lower. In most cases, the truth lies somewhere in between those two levels. Well, just recently, that bullish percent index got below the 22% level. In fact, it got down as low as 12%, and it's now at the 22% level now. So it has reversed back into a column of X's, which suggests to us that there are more buy signals now being generated than sell signals. This is a positive sign. And I'm not sure in cricket whether you would have offense or defense, but it would suggest that you have possession of the ball. You're probably batting the ball at this point in time, not pitching the ball. And that's where the index is. So I think you have a good potential on the upside. When I look at the market itself, I look at two box sizes here. One is a 100-point box, and that's a little bit slower. It's not pretty much for traders, but the long-term trend has been up. It's above the long-term bullish support line. Everything still looks fine. On a short-term basis, you've gone through a couple of sell signals, and I think probably some of you traders are disconcerted at some of the carnage that has happened in your positions on a short-term basis, but that's going to be relatively short-lived, I think. The long-term trend is still up as far as the India markets are concerned. One of the things that was interesting to me, and I pulled this chart up so I could refer to it, is comparing and contrasting the large cap stocks in the India market with the small cap stocks. What's interesting is just this month, on the 8th of December, this index reversed up into a column of X's. Now, when we compare and contrast two things, we're going to divide one thing by another. So we'll have large cap stocks divided by small cap stocks. That gives us a number. We then change that to a percentage, plot it on a point and figure chart, and it gives it life. And on the 8th of December, this index reversed up to a column of X's. What that means is X's are rising. In other words, it's pointing to the numerator instead of the denominator. In other words, at this point in time, it suggests that you should be long large cap stocks at the sake of small cap stocks. How long this will be in effect, I have no idea, but it's worth knowing that when you're putting on your trading positions. A couple of ideas here that I looked at, some nice looking charts here. Bharat Forge, which is in the consumer cyclicals, nice strong uptrend. It's a technical attributes of 4 out of 5. That's BHARATFORG.EQ on our system. And the next one I want to look at is Infotrek Systems, that is INFOTRER, Infotrayer, oh, excuse me, that's Infotrek. This is a chart pattern that really interests me. When I see a stock that gives a buy signal, it pulls back. It inhales, it exhales, pulls right back to the trend line, gives another buy signal, exhales back to the trend line, gives another buy signal, and I'm waiting for the next exhale. This is a good, logical, organized up move in this stock. I have no problem buying it whatsoever. If the stock went to 28, I would have to change my tune and think there was something wrong. I doubt that's going to happen here, so I think you can buy this stock at the market. Nike, or Nile Limited, excuse me, very, very strong uptrend, nice triangle pattern right here. I can buy this one at the market too. It's a 5 out of 5 on our technical attributes. So there's a lot of interesting things that are happening there. And one of them was, I was looking at one here that was a Soraya compliant, where did I put that? On this other side here. Here's two that I hadn't talked about. I knew I had them here and had forgotten about them. The Soraya Bees ETF. The Bees are an ETF group. The Soraya compliant stocks. It's interesting in that I run one of our models for my own account in Malaysia, and it's Soraya compliant stocks. And when I looked at my model compared to our model against the Malaysian market itself, the Soraya compliant has outperformed it significantly, hands down. Here's the reason. Most of the stocks in the Soraya compliant in Malaysia are smaller cap stocks than the large stocks. That's been the real play here. I'm not sure if that's the case with the Soraya Bees. It's something we probably have to look into. But this ETF looks very, very good here. I think you can buy it at the market, and that's the Soraya compliant Bees. I have one other here, and this is Reliance Banking in the banking industry. Chart has pulled right back to the support line. This would be great for traders. It's right on the trend line. I would look for a move to 1050 would be my stop. Otherwise, it counts. I think this stock could move up to the top of the range at 1,500 rupees per share. So that's all we have today for the DWA Minute. We'll catch you later, and hopefully on our trip down the coast of India, I'll see you along the way.